Anyway, we'll stay abroad because the Bank of Japan's underlying inflation measures in April falling below the 2% target for the first time since August 2022, which complicates the picture for the Bank of Japan, which is in hiking rates. That's as the Japanese yen falls to its weakest level in almost 16 years versus the British pound. And the Nikkei takes a pause, down roughly 4% this quarter, though it is still up more than 15% on the year. Is now a good time for investors to jump in? Joining us now is Neuberger Berman Japanese equities portfolio manager Kei Okamura. This was the hottest trade around, buying Japanese stocks. Is it still?
Yes, it was. It is important that these markets do go through these sort of moments of, adjustments, if you will. We did see Japanese equities, notch quite higher, especially going into March, hitting that all-time high, and then it went into a soft patch. And from our perspective, I think this kind of makes sense, given that this was leading into earnings season, which just wrapped up a couple of weeks ago. And I think one of the key takeaways that we had was that management in Japan were very conservative about the year ahead. And I think the key reason for that has to do with the uncertainties about the yen, what you alluded earlier about the Bank of Japan, and of course, global growth concerns. However, if you look at the fine details of some of these earnings projections, they are overtly conservative. So our view is that as we go into the new fiscal year, into, say, autumn, we'll get a little bit more clarity on the domestic economy. We'll get more clarity on the direction of the Fed, which will obviously have a big impact on the yen. And I think from there onwards, we should expect to see Japanese companies revise up their earnings forecast going forward, and that should bode well for Japanese equities going forward.
So what do you expect in terms of policy from Bank of Japan? They hiked interest rates. What are they, all the way at zero now? So where do they go from here?
Yeah, I don't know how much we could be so happy about being at zero, but it's better than being negative. I think the key point, though, is that the Bank of Japan Governor Ueda has been changing his tone in recent months. And I think what he's been saying was that if the central bank gets indication that there's this virtual cycle of wage growth, inflation, and consumption coming back, the indication part is the most important factor for them. And that evidence will probably come through in July, August. And from there onwards, we should expect to see, the Bank of Japan looking to normalize interest rates further. The one sort of, wild card here is, of course, what happens with the U.S. Federal Reserve. And of course, the direction of the yen that could bring back or push into the later months the rate decision. But we do expect that the decision will come through in the not so distant future.
I mean, the story was also about animal spirits and Japanese companies waking up to some of the maybe international pressures from foreign investors, shareholder-friendly cash returns, hiring decisions and higher wages. Is all of that is that story still intact?
I would definitely say so. We just had a couple of very good meetings with some of our core holdings. We have one sheet metal fabrication equipment maker, a company named Namada, has 70% domestic market share, one of the top 3 in the world. They're projecting good earnings growth going into the new fiscal year, but on top of that, they've committed to buying back shares for the next, effectively the next 3 years. So to do that, you need to have earnings visibility. You need to have confidence in your products, the demand for that. So we do think that the animal spirits are there. I think what is even more important, though, is that if you look across the progressive companies, especially those that we hold, they're really moving on not just the numerator of the return on equity, that's like the P&L, but also on the balance sheet, which is on the denominator. And it's that combination of those two factors that I think will really make or break for companies in Japan. We do get a lot of companies that are sort of in lower quality genres. Those companies are just working on their balance sheet. And that is, who knows how sustainable those re-ratings will be going forward.